Good morning, everyone, and welcome to our Audit and Finance Standing Committee meeting of February 25th, 2026. My name is Kathy Daigle-Gammon. I am Chair of Audit and Finance. Supporting us today, our Legislative Assistant is Dorothy Maponga, our Solicitor is Chris Giddens, and our Executive Director CFO is Jerry Blackwood. So we'll call the meeting to order and do our land acknowledgement. Call the meeting to order at 10:02. Sorry about that, Dorothy. I almost forgot to say the time. The Halifax Region Municipality is located in Mi'kma'ki, the ancestral and the traditional lands of the Mi'kmaq people. Municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. We also recognize that African Nova Scotians are a distinct people whose histories, legacies, and contributions have enriched the part of Mi'kma'ki known as Nova Scotia for over 400 years. We'll now ask for an approval of the minutes of January 21st. Councillor Saint-Amand, seconded by Councillor Morse. Any errors or omissions? No. So all those in favor, please signify by saying aye or raising your hand. Opposed, nay. The motion is carried. Thank you. Approval of the order of business and approval of additions or deletions. Madam Clerk, do we have any changes to the order, additions or deletions?
No additions or deletions have been received by the clerk's office.
Thank you. We'll ask for a motion now to approve our order of business as presented. Councillor Gillis, seconded by Councillor Saint-Amand. All those in favor, please signify by saying aye or raising your hand. Opposed, nay. The motion is carried. Thank you. Business arising out of the minutes, there are none. Call for declaration of conflict of interests. Seeing none. Motions of reconsideration, there are none. Motions of rescission, there are none. Consideration of deferred business from January 21st, 2026. The 8.1 is the Wanderers Grounds Stadium expenditures. It says that there are no presentations for this report, but Allison Wood? Yes? Oh, somebody different. Andy Conrad, Manager of Community Partnerships, and Brendan Smithson, Director of Regional Recreational Services, are available to answer any questions. If a member of council would like to put the motion on the floor, and then we could discuss. Vice Chair Saint-Amand, thank you.
Thank you, Madam Chair. I move that the Audit and Finance Standing Committee recommend that Halifax Regional Council 1 approve a one-time withdrawal of $590,385 from the Options Reserve Q421, with this amount deposited to Cost Center C721 in order to fund the Wanderer Grounds temporary stadium expenditures, and 2, pay the Halifax Wanderers Football Club the amount of $590,385 in accordance with the services agreement, with such payment addressing both the HWFC fees to manage Wanderer Grounds Stadium on behalf of HRM and to reimburse HWFC the additional expenses it properly incurred in its management of the Wanderer Grounds Stadium. I'm not sure where to saw off as far as what questions to ask in public versus the items that we have in camera. We do have quite a number of contractual items that are raised in the in-camera report, and that's largely where I'll focus some of my questions.
Thank you very much, Vice Chair Saint-Amand. I see no other names on the list. Is there a call for the question? Oh, yeah, or we can. So we request to go in camera now? Okay, thank you. Seconded by Councillor Gillis. We'll go in camera. Thank you very much. Thank you, everyone, for your patience while we did that short in camera. We are returning to the discussion on 8.1. The motion was put on the floor by Vice Chair St. Amand. It was seconded by Councillor Gillis. I don't see any names on the list. There's a call for the question. All those in favor, please signify by saying aye or raising your hand. Aye. Opposed, nay. The motion carries. Thank you so very much. Notice of tabled matters, there are none. Correspondence. Madam Clerk, has there been any correspondence received for this agenda?
No correspondence has been received by the clerk's office, Chair.
Thank you. And petitions.
No petitions either have been received by the clerk's office.
Thank you. And we have no presentations. So public participation as of 4:30 on the Tuesday following, February 24th. There were no registered speakers, but we will ask 3 times if there is anyone in the gallery that would wish to speak. The second time, is there anyone from the gallery that would wish to speak? And for the third and final time, is there anyone from the gallery that would wish to speak? So seeing none, we'll move on to item 12, information items brought forward. There are none. We have a staff report under 13.1.1, which is the transfer of approved business systems funding to HRP Technology Innovation Project C1250012. We do not have a presentation for this report, but I don't see David Thorpe here. Martha Wilson? Yep, Martha Wilson is here if there are any questions. So would a member of the committee like to put the motion on the floor? Councillor Hensby, thank you.
Move that the Audit, Finance Standing Committee recommend to Halifax Regional Council approve the transfer of funds from capital project CI 990023 HRP Record Management Optimization and capital project CI 220002 HRP Internet Refresh to capital project CI 250012 HRP Technology Innovation as outlined in the financial implications section of the staff report dated February 12, 2026.
Thank you, Councillor St. Amand, for the second. Councillor Hensby?
No comment. Good to move forward. Thank you.
Thank you. Vice Chair St. Amand?
Thank you, Madam Chair. The only question that I really had is the report spoke of the higher priority for HRP Technology Innovation Project, but not a specific reason for the other 2 projects from which we're pulling being deprioritized. So I'm just kind of curious how these level out with one another.
Thank you, Vice Chair. Mr. Thorpe is coming.
Good morning, David Thorpe, Chief Information Officer. So through the chair to the councillor. So again, working with HRP, they determined that these existing ones, so these were projects that had been on the books for a few years that hadn't had a lot of action happening on them. So in particular, the intranet refresh project, we provided them a SharePoint site which addressed some of the needs that they already had without needing any additional funding.
Okay.
And similarly on the records management, we've done some other work for them that's sort of negated needing to do things now.
Terrific. So these are line items that are not likely to reemerge unless some other priority were to be raised?
Correct. That's our expectation. They seem quite happy with particularly the internet, the SharePoint site, which enabled them to do some of the key things they wanted to do. So
okay.
It'll be a far out in the future thing that we would do anything else. Similarly, on the records management side, there's discussions with the province on centralizing some of that, so we may be completely out of that business.
Okay,
anyway,
terrific. Thank you.
Yep.
Thank you, Vice Chair St. Amand. I see no other names on the list. We will call for the question. Question is called. All those in favor, please signify by saying aye or raising your hand. Nay. The motion is carried. Thank you so very much. We move now to item 13.1.2, the 25-26 write-off of uncollectible accounts. There is no presentation, but we do have Vicki Robertson here, the Director of Revenue and Treasury. available to answer any questions, as well as Caitlin Gilbert. So we do have a motion. If a member of the committee would like to put the motion on the floor. Vice Chair St. Amand, thank you.
Thank you, Madam Chair. I move that the Audit and Finance Standing Committee forward this report to HRM Regional Council for approval and recommend that the Halifax Regional Council approve 1, the real property tax accounts in the amount of $42,291.98, comprised of $28,510.58 principal and $13,781.40 interest, as summarized in Schedule 1 of the staff report dated February 21st, 2026, be formally written out of the books of account. 2, the general revenue accounts in the same amount of $96,431.83, comprised of $86,245.29 principal and $10,215.66 interest, as summarized in Schedule 1 of the staff report dated February 21st, 2026, be formally written out of the books of account. And 3, the recreation accounts in the amount of, maybe it is recreation. Recreation accounts in the amount of $6,056.96, comprised of $6,056.96 principal and $0 interest, as summarized in Schedule 1 of the staff report dated February 21st, 2026, be formally written out of the books of account.
Councillor Gillis for the second. Thank you. Vice Chair, any comment? Nope. Thank you.
All good.
Councillor Hensby.
Thank you much, Madam Chair. I'm just kind of curious. In the past, when we've seen these write-off of accounts, there was also an accompanying camera report telling more details of what type of accounts they were, who they were, or what properties were involved. So, kind of curious why we don't get that information anymore.
Our CFO will answer.
Thank you, Madam Chair, and I think Vicky might have some things to add. So I think we've answered this question multiple times. So yes, we used to do that, and on the advice of legal services, we no longer provide the names as just protection of privacy is essentially what it comes down to. Vicky, do you have anything to add on that?
Thank you, Jerry. Vicky Robertson, Director of Revenue and Treasurer. Through you, Madam Chair, to the Councillor. Yeah, Jerry is absolutely correct. The advice that we were given was that the information should only be given out for purposes that are necessary. And in this case, it was determined that it was not necessary to have the names or any other identifying information when it comes to writing off the accounts.
Okay, now I was kind of curious about the recreation accounts. You know, for 8 accounts, $6,000. I'm kind of curious of how we try to collect them in the past. I know that we've refused persons or organizations, whatever the case may be, to attempt to rent or buy memberships or whatever the case may be, or rent gymnasium space or whatever the case may be, until outstanding debts have been paid. So if these things are written off, do those 8 accounts become eligible again to rent or utilize recreation spaces?
Through you, Madam Chair, to the Councillor, it's really up to Parks and Rec at that point. These are generally facility scheduling type accounts, so there's people may have rented, booked a room for an event, a wedding, a birthday, what have you. We, in some cases, will allow those bookings to go ahead before the payment has cleared, so to speak. So they might have written out a check that later became dishonored or something to that effect. Then we do try to collect it through various means, but unfortunately, sometimes we just cannot find them. We do, Parks and Rec, from what I understand, do keep a, sort of a flag on that account to make sure that they do not, or not able to rent again.
It just seems that this small amount of accounts with a large amount of money, per se, to me it looks like it's a recreation association. It could be basketball teams or hockey teams, whatever, not paying the bills for rented ice rink or basketball court time. I'm just kind of curious of, are these more organizational debts we're writing off or personal individual debts? And that's why in the past, with in-camera reports we used to get, we can distinguish that. Now I can't, because we're being, I guess you could say, desensitized with all the information we used to get.
Thank you, Madam Chair. I mean, I don't see, Councillor, what benefit it would be to have that information. It's like staff has done the due diligence around the accounts. We have deemed that, they are uncollectible. We have taken, process, policy, third-party collection where lienable. We've implemented our practices around collections. I don't see really what benefit it would be to council to know whether it's a hockey organization or if it was an individual. That is the advice that we were given on legal. It wasn't advice that we asked or solicited. It was advice that was provided to us, and we were advised to stop the practice.
Well, all I can say is sometimes local councils may know about local knowledge and moral persuasion when it comes to some of these organizations and teams, whatever. So just saying is that it would be nice to know if there's such organizations or groups or personnel doing things in their particular districts. I'd like to make sure we try and do the best possible to make sure they don't do it again. So I would like to think in the future we could be included in that circulation of information. Thank you.
Thank you, Councillor Hinsby. See no other speakers' names on the list to call for the question. All those in favor, please signify by saying aye or raising your hand. Opposed, nay. The motion is carried. Thank you. We now move on to 13.1.3, which is the third quarter 25-26 financial report. And we have Dave Hurley here, the Director of Financial Management and Operations, and Tiffany Smith, Manager of Service Delivery, to provide us with the third quarter financial report. And we do have a presentation. So we'll have the presentation first, and then we'll put the motion on the floor. Thank you.
Okay, good morning. So here today to talk about this year as opposed to next year, which is where finance has been here for a lot over the last couple of weeks. So just a quick update on our current projected position. We're projecting a small surplus of $26,800. Just a quick reminder, we've been trending fairly flat for most of the year. So Q1 we were estimating about $200,000, and for Q2 just under $600,000 of a surplus. Quick summary of what makes up that total. So a decrease in fuel due to lower than budgeted average price per liter. So that's primarily in transit and fleet is $4.4 million. Savings in fiscal related to compensation changes and contracts. $4.2 million, so a lot of that is unbudgeted items within the business unit and offset there. A decrease in RCMP contract costs due to delays in filling new positions is $1.1 million, and just to note that we do expect that to update as we're still waiting for an update from the RCMP on the total number of positions that they have filled. Decrease in expected heritage and affordable housing grants is $500,000. The heritage grants, that's due to historical low usage, and then the affordable housing grants, we're prioritizing using external funding and reserve funding over operational funding. So offsetting those amounts, we have an increase in an unbudgeted equipment purchase repairs for $900,000, and that's primarily in fire. Increase in compensation and benefits across the organization is $1.1 million, so that's exceeding what we've budgeted for vacancies across the organization, and is primarily driven by overages and overtime, primarily fire, transit, and in police. Decrease in secondment and extra duty recoveries in police is $1.4 million, and that's due to lower demand and some unexpected discontinuations of secondments, as well as staffing challenges within police. Decrease in investment income is $2.8 million, and that's primarily driven by lower interest rates and lower cash balances than budgeted. And then an increase in various external contracts across the organization, primarily in parks, but there is some in other business units as well, such as for snow contracts. And then the full details are available in attachment 2 to the report. So quick update on risks and opportunities. A number of these we've presented in the last 2 quarters. So impacts of severe weather-related events, commodity costs, fluctuations in those, uncertainty in global trade, a lack of uncommitted reserve balances, unplanned project requests, and then a couple new ones that we've added are softening of building permit fee revenue. So we did take an estimated reduction of $3 million from what was budgeted, but we are seeing that continue to trend fairly low. So we are expecting some additional decreases to have to come out in the next period. And then increasing debt levels, and this is more not impacting this year, but as we're expecting larger levels of debt to be taken on, it kind of reduces our flexibility operationally when you're paying the larger debt servicing costs. So next, quick snapshot of district capital funds. So to the end of December, the chart shows what's remaining by district. So total combined budget is $2.7 million. Spent or committed to the end of December is $1.8 million, and that leaves $951,000 available between all the district accounts. District activity, same chart displaying what's available per district. $72,000 combined budget, $55,000 is spent or committed, and then that leaves $16,700 available to be spent to the end of the year. Next is our recreation area rates. The carry forward in these accounts was $1 million. Revenues earned to the end of December were $808,000 against expenses of $994,000. So that leaves a projected carry forward of $833,000 in these accounts. For our reserves, the opening balance at December 31st was $518 million. Our projected closing balance at the end of the fiscal year is $353 million. And then if we look ahead to fiscal 29-30, our projected closing uncommitted balance is $96 million. For aged accounts receivable, the gross accounts receivable at December 31st is $94 million. So for our capital projection summary, the net budget available before expenditures at December 31st was $721 million. Spent by the end of December 31st is $255 million. Projected expenditures to the end of the fiscal year is $109 million, and then our expected work to progress into next fiscal is $343 million. So next is expenses for reportable individuals. So for the 3-month period ended December 31st, $23,194 was spent. And full details are available in attachment 9 to the report. Just noting that we do have just under $4,000 that is actually missing from the mayor's expenses. So those were due to timing. Those were posted later. So those will be fully acknowledged on the 4th quarter report. And then finally, council approvals coming outside of the budget process. So we have total new estimated operating costs in year to December 31st of $16.2 million. Total reserve deposits net of withdrawals is $14.2 million. And I did miss one bullet. We actually also have $1.5 million increase for capital. And that's related to an increase for the structural fire training prop. And the biggest impact on the operating and reserve is the reserve approval for the $15 million that's being deposited in. Okay, so that's the end of the presentation this morning, and happy to take any questions you might have.
Thank you so very much. Councillor Hensby, would you like to begin with putting the motion on the floor for us as well, please?
Certainly. The Audit and Finance Standing Committee forward the 3rd quarter 25-26 financial report to Regional Council for their information. My only question regards to one of the items under finance and asset management, the write-off of expected dead stock. Is that fleet and fleet materials in regards to old bus material parts that we don't use anymore because the bus is no longer on the road, or certain trucks and vehicles? I was kind of curious of what the dead stock actually is.
Through the chair to the committee member, yeah, it would be a combination of our municipal fleet as well as transit. So it would be items that have been determined not to have any further use and need to be written off.
Now, can any of those materials be sent back to suppliers, or can any be valued as scrap metal? Just kind of curious if anything can be recycled or returned.
Through you, Madam Chair. So we do have a warranty program where we do actually look to wherever we can take those goods back to the supplier, and in doing so recoup the costs we spent. So this would be items where we've identified we can't actually do that. We're past either the point where we're able to do that. They may no longer have any use for it. It might be for a vehicle that's no longer being made or anything like that. So this is the items where we really don't have that option available to us anymore.
So what do we do with the material? Do we sell it off at auctions, or just kind of curious of like how we dispose of it?
Thank you, Madam Chair, through you to the councillor. So with the dead stock, yeah, we certainly try to manage that program as best as we can, and there's reporting from our procurement department who manages our corporate inventories for transit and corporate fleet to the superintendents there. One of the issues we kind of run into is because our fleet is so vast, and so I guess it's not standardized, especially on the municipal fleet side. There tends to be a lot of demand to keep parts on older vehicles, even though those parts aren't typically moving in an inventory turn, that we want to have them just in case kind of thing. So in a lot of these cases, what we're doing is we are still holding some of that inventory, but we're taking the write down because we don't think that it is going to be used, and we will get a return on it. In other cases, it will follow our surplus policy, like we would for furniture or surplus vehicles. Send it to auction, or try to get a return that way.
Thank you.
Thank you, Councillor Hensby. Councillor Morse.
Thank you, Chair. Could you tell us a little bit more about the softening of building permit revenue? This is an important source of revenue for HRM. So what is, how much softening? What's the trend? What do we expect going forward? This is one of our few alternative sources than property taxes.
Through the chair to the committee member, so we did already reduce the projection for this year by about $3 million, which is already reflected in the Q3 and previous results that we brought forward. A big piece of that was there were code changes that came in right ahead of the end of the year last year, and there were quite a few developers that took advantage of getting their permits in ahead of those code changes occurring. So a big part of the smoothing that we did was because we didn't expect that big bump to occur again this year. Now we are expecting a little bit further softening to occur. We are seeing some of that being offset though by our other permit revenues. So it's not as large of a decrease that we're anticipating coming into the next period, but we are continuing to see a little bit of a trend of softening compared to last year, which was quite a large year for us.
Okay, but is it broader economic factors or?
Through you, Madam Chair. So yeah, there would be that would tie into it. It's really about the amount of demand that we have for those things. So it's really around how many permits are actually being come in by the developers. So if that does tend to soften, and as we said, because there was that push by the developers to get it in before those code changes happened, we are seeing now that that they kind of pulled some of those that we would have seen in this year. They pulled it back into the previous year, so we took a bit of an increase at that point in time. Now we're seeing it kind of soften out a little bit. There is the expectation it will kind of start to even out a little bit, but it's really dependent on the market itself, how much they're looking to actually build at that point in time. So if the economy is strong and they're looking to actually increase that, we will see that kind of rebound. But if it's not that case, that it will continue to kind of stay on this trend that we're seeing.
Okay, do I have a bit more
Councillor
time?
Morse, our CFO, has some additional comments.
Yeah, thank you, Madam Chair. And just with regards to the permitting revenue, I mean, we did, I think, disclose the council last year during budget committee that we did push on permitting revenues, and that we were pretty bullish on that there could be a risk factor that we might not make that number. But as we were trying to mitigate the tax increase last year, I'm pretty sure we said to council, there's some risk that comes with pushing on that number.
Okay. Now am I out of time?
No.
Okay. I just had another question about some of the listed expenses. The mayor's expenses were listed as $58.61 for October to December, but there was no listing in categories. We have travel, training, or meals. It wasn't listed under those categories. So can you provide some details, please?
Through the chair. So the expenses that you're seeing would be the year-to-date for carry forward. So the full details would have been on the previous reports where we only show the 3-month period for current expenses. So you could actually go back and look at Q1 and Q2 to see the breakdown of how that actually fit into travel, training, meals, etc. So we tend to just show for this 3-month period what was spent, and then the total balance year to date as well.
Okay, but it was listed in those categories for everyone else.
Through you, Madam Chair. So it is listed in those categories for everyone else for just this 3-month period, as Tiffany had said. What she mentioned during the presentation was there is another $4,000 or so for the mayor's office that would have been included in this quarter. Unfortunately, we didn't receive that information. It wasn't processed through for repayment up until the end of the quarter. So it didn't make it into the reporting for this period. It's going to show up in our fourth quarter report. So his fourth quarter will show that additional, his fourth quarter spending, as well as that $4,000 that should have been reported in Q3, but wasn't submitted in time. So that's all going to show up in that. It will have that breakdown at that point in time. But right now, all we're showing is what he spent basically in the first 6 months of the year. We don't have anything for the third quarter to report.
So you won't be able to give us a categorization today?
Not of that. We have provided that for those ones in the previous quarters. So in Q1, you would have seen the same breakdown for his Q1 expenses and the same in Q2. We just don't have it for, we don't repeat it for each quarter.
And that'll show up.
Our CFO has a comment as well.
Okay, thank you.
Thank you, Madam Chair. Yeah, I can speak to that because I signed off on the expenses just yesterday. So it's for just local travel.
Great, thank you.
Thank you.
Thank you, Councillor Morse. Councillor Hensby.
Thank you much, Madam Chair. Just a couple other I'd like to try and get a breakdown. I see that we got surplus revenue from the micro-mobility pilot with Bird Canada scooters and parking station revenues. We got $418,000 there. Is there a breakdown between what was from Bird Canada versus the parking station revenue? Do you have an idea of the breakdown of that amount?
Through the chair to the committee member, I don't have the breakdown in front of me, but I can tell you that the bulk of that is the parking revenue versus the what we're getting from the micro-mobility or the micro-mobility. I think it's under 100,000, and it's because they didn't budget any revenue this year.
And so this is the first year of the 3-year pilot, is it?
I believe so. I believe that's correct.
Okay. Yeah. And also under the transit, the unbudgeted new student pass program revenue, the government just announced they're not going to be doing it the upcoming school year. So I'd just like to know is how is that going to reflect on our balances? Like our fiscal year does not coincide with the school year. So kind of figures that the money we got is going to run out March 31st, and then we show in the first quarter of the next year a loss in revenue, because I assume we're going to be honoring the student passes until the end of June.
Through you, Madam Chair. So we're still kind of digesting everything that's coming out of that. There will be a ballot item that we're looking at to bring forward as part of next week to kind of show what the impact of that is going to be. So we expect, we're just trying to get our heads around completely what the impact of that is going to be and how we're going to reflect that.
Okay, thank you.
Thank you, Councillor Hensby. Councillor Gillis.
Thank you, Madam Chair. Just a question around one of the lines on the public works, the $229,000 for the projected surplus in various operating costs, primarily due to the projected reduction in winter towing costs. Why do we have a surplus in that area? It's the second line from the bottom.
So I think in terms of the why we would have a surplus in that area, I don't think we have that information directly with us, but we can follow up and provide some additional information on that after the fact.
Does that mean we're towing less cars in the winter? Is that kind of what that means?
Be the assumption is we're towing less cars, but I want to make sure what we're saying is, are we towing less cars versus what we budgeted for, or versus what we've seen in past years? I don't know that we have that information. So,
okay, thank you.
Thank you, Councillor Gillis. Councillor Hensby again.
Thank you very much, Madam Chair. Just one other item I want to ask about the Affordable Access Program. I see we have a deficit of almost $260,000. The Affordable Access Program, I believe, is in three different categories. There's tax relief, there's transportation relief, and recreation relief. Is it possible to get a breakdown of what that may be in the Access Program? Just like to know if we're getting more of an uptake on the transit, or is it affordable housing, taxation relief, or is it recreation access?
Through the chair, I think the line item you're referring to is in Parks and Recreation. Is it the 258,600 deficit?
Yes.
Yeah. So that would be related to the Affordable Access Recreation Program, where they have either the discounted or free programming available. So that would be above and beyond what we budgeted in year for that program. We're seeing an overage in uptake compared to what we expected it to be.
Okay, so I would assume then the other two categories for the transit and stuff, would there be a different category for that under the different sections?
Yeah, that wouldn't be included there. Yeah,
because I didn't see any reference to that under transit or under fiscal services for tax relief. Okay. So I assume we're probably still on budget for those two areas then. Okay, thank you.
Thank you, Councillor Hensby. Councillor Morris.
Just further to the affordable access in recreation. Was that full year that it was that amount, or was that a quarter?
Through the chair, so it would be projected full year. That's where we're estimating.
Okay.
So we could still see that number change to the end of the year, but we are projecting that out to the end. Yeah.
Okay, and so that's about $250,000 more than they anticipated needing for that. And has it been? So it's been honored. That amount has been paid, and okay. Thank you.
I don't see any other names. If I might ask a question from the chair, please, and thank you. In Parks and Rec on attachment 2, I'm just the $3.6 million deficit of RBC in the Greenfoot Center. So they're both MDFs, right? And we're doing a review of the MDFs currently, and when we have our budget, we get that whole listed line. So this $3.6 million deficit, that's the projection to the end of the year?
Through the chair, that's correct, but I would note that 3.6 is not just RBC and Greenfoot Center. There is a combination of various Parks and Recreation contracts that's included in with that number. I'd have to take a look at the full details to give you what the breakout of that compared to everything else, but that is including janitorial cost overruns, porta potty, as well as, yeah, so there's a number of contracts.
Oh, okay, great. Because I wasn't sure. I was trying to compare that to the schedule that we saw when we were in budget, and it didn't quite compare. But so the porta potties, the janitorial costs, they could be for other facilities other than those two. Excellent. That's the clarification I needed. Thank you. And Dave?
One, just for a bit of clarity on it. So the Greenfoot Center and the RBC Center, they're both the 4 pads, so they are different from how we would treat the other MDFs because they're run on with a management agreement through Nestadia, as opposed to being run by the individual boards as we would see with the other MDFs. So that's why it's kind of listed here as a contractual thing. It's contractual amounts with Nestadia that we have there. That's driving that difference.
So do we think that that's going to continue into the next fiscal year?
These are more one-off expenditures that we have to make, or in this case, based on the contract that we have with Nestadia.
Okay, great. I'll have to admit, I really appreciate that attachment too. It brings those numbers to life a little bit better for us, and I do appreciate it. Thank you so very much. So no other names on the list. I'll call for the question. All those in favor, please signify by saying aye or raising your hands. Opposed, nay. The motion is carried. Thank you very much, Tiffany. Thank you, Dave. We appreciate it. So motions, there are none. 15.1, the income of minutes we've already done. So 15.2, there's a public motion here. If someone would like to put it on the table. Vice Chair St. Amand, thank you.
Thank you, Madam Chair. I move that the Audit and Finance Standing Committee 1 adopt the recommendations as outlined in the private and confidential report dated February 19th, 2026, and 2, direct that the private and confidential report dated February 19th, 2026 be maintained private and confidential.
Your hand. Opposed, nay. Motion carries. Item 15.3. Sorry, I was reading for a minute there. Councillor Gillis?
Oh, need it just,
Pardon?
yeah.
Oh, no, we have already done it? Okay, 15.3 is done. Great. And then added items, there are none. Notices of motion, there are none. The date of our next meeting is March 25th, 2026. And a motion to adjourn, please, for 11:06. Councillor Gillis. Thank you, everyone, and have a wonderful day. Thank you.